Can you elaborate on the demand environment in the US and Europe in context of the geopolitical events in Europe and macroeconomic challenges seen in the US? What is the exposure to Europe, especially Germany? And how do you see the TCV pipeline? And for Nilanjan, similar question on margins again. How do you see the trajectory for margins given weak traditional H2? And what is the kind of leverage available with respect to bench utilization?
So on the demand environment, what we see is on the macro front, what I shared earlier, which is we had indicated last time we started to see some concerns in the mortgage side in financial services, in the retail industry. We are seeing this time some concerns on high tech and in telecom industry in addition to those. These are more on the discretionary part of our pipeline. We also at the same time seeing a strong large deals pipeline, which gives us some confidence. We've pivoted, and I think the market itself is also pivoting with our clients, where there's more and more interest in automation and cost efficiency, and we see that coming through within our pipeline. We've seen growth both in digital, over 30%, and in core, which shows that both of our engines are working quite well. In terms of US and Europe, today in Q2 we had a very strong growth in Europe, over 30%, strong growth in the US, over 15%. We continue to see the pipeline between both of those geographies today, but also keeping in mind that we are being watchful given the macro environment developing.
So on the margins, as we look at second half, we've ended the first half with about 20.7%. And like we've guided at the bottom end of the 21 to 22%. So of course, margins for the second half will have to go up. And of course, we have our levers in terms of our utilization, which is one of the factors mentioned, because we are really at the bottom end, of our utilizations. As we put a lot of pressures into the system now, they are sitting on the bench, but over a period of time, they will start getting deployed. So this will become a tailwind. As attrition starts coming down, of course, this will be a benefit in terms of stretch salaries. So that's one of the other things which started helping us. So I think in this range of 21 to 22, we are quite comfortable for the full year as well.